Hi, Mike and Lee. It's Chris Marakian over at Mortgage Coach. I talked to Mike a couple times, and he thought it might be best to see a quick demo to see what Mortgage Coach is. Um, you guys can talk about it internally, and if there's more interest, you could certainly get a more formal demo. So what is Mortgage Coach? It's a software that helps loan originators present loan options to their borrowers in a more humanized way. It gives them options, and it gets away from the Excel spreadsheets and the fee sheets and provides clarity. I think people outside this business find it to be very difficult, and we try to simplify it as much as possible. So no stranger, the things listed here are hurdles that loan originators must go through every day. And this is what Mortgage Coach tries to combat. And I spoke earlier about, the fee sheets and the Excel spreadsheets. That's what we're trying to get away from, right? The status quo, very complicated, not easy to understand for a borrower. And then on the right, obviously, is Mortgage Coach. And, you're getting bars and graphs. Everything is spread out and detailed and just much easier to understand, which we'll certainly get to in a minute. 34% of the top producers use Mortgage Coach, and 7 of the top 10 lenders use Mortgage Coach. And probably what you're more interested in, these are the top banks that use Mortgage Coach. And you'll see most of them are Midwest and West, because that's where Mortgage Coach is based out of California. They hired me to try to get more presence in the East Coast. So hopefully that, we're making grounds, and hope to make many more in the next year or two. And these are the kind of strategies that you can go over with Mortgage Coach, and presenting what we call a TCA, a total cost analysis, which was on the right hand side here. This is what a TCA is. So these are the strategies that LOs can go over, and I think I'll share one last slide. This is kind of what we hope, if a loan originator is using a total cost analysis and sending it to their borrowers on a daily basis, like any software, right? In order to be effective, you have to use it a lot. You can't just use it every once in a while. So they're going to reduce the risk of borrowers, rate shopping, borrowers going to competitors with lower interest rates, because we're getting away from just the rate conversation and talking about, here are the comparisons. Here are the 2, 3, 4 options, and here's how it's going to affect you short-term and long-term. Let's talk about how we can build wealth and how we can decrease debt. And you can't see that on, like I said, a spreadsheet or a fee sheet. And when borrowers are presented with this, they're less likely to go rate shop, because again, you're getting away from just that rate conversation. Preserve margins through fewer price exceptions. There are certain companies that use this, and they say they won't even talk about a price exception unless the loan originator has given the borrower a TCA. So fewer price exceptions, increase pull-through from all sources while reducing fallout, and improve profitability by presenting all available loan products. So we've seen it time after time where they're increasing, loan originators are increasing conversions by 20 to 30% in the first 30 to 60 days that they're using this, and decreasing price exceptions by 15-20%. So the numbers are pretty staggering. So let's get rid of this, and actually let's talk about let's look at the TCA. So this is a TCA that we were talking about. As you can see in the upper left-hand corner, it's branded. You have the loan originator's picture, their information. You will have your company logo up here, a little welcome message, which you can certainly tailor to whatever you want it to say. You'll see in the upper right-hand corner, it says views. So that's really important. So when you send this to a borrower, the view is going to change, and the loan originator will be alerted, whether it is through email, phone, iPad, what have you. They're going to be alerted, and that gives the loan originator an opportunity to jump on a call and say, hey, Mr. Borrower, have you had a chance, kind of play dumb. Have you had a chance to look at the TCA that I sent you? And of course, the borrower is going to say, wow, that's, it's amazing. I was just looking at it. And that's a chance for them to actually go through the total cost analysis and talk about it and really explain it and make it as detailed and simplistic as possible. You'll see on the left-hand side, in this case, it's a 30-year, a 20-year versus a 15-year. Everything is detailed. And of course, you can click on more information to really break it out. Shows you the payment breakdown. It's going to give you the closing cost breakdown. And a great one to have here is, this is not filled out, but this is great to have. This is a reinvestment. So let's say that they're going to refi, and with this option, whatever option you pick, they're going to save $200 a month. Great. Let's take $100 and reinvest it into some kind of money market where you're going to yield 4%. So you'll be able to see here, what that does over time. It's 4%, and then over 10, 20 years, this is how much money you're going to have. And when you're on the phone with the client and they're looking at this, you can actually select anything you want, and they're gonna see this selected on their end. So it's real time. On the right-hand side, you're going to see the graphs that we were talking about. If you hover over a graph, it's going to tell you exactly what it is. And again, there's always more information. So how did we get here? Here's the breakdown. Savings over 60 months. How did we get there? Here's the breakdown. So it's very easy to use. Again, just makes it simplifies everything. How did we get here? So in this case, this is where the loan originator is going to work out of. They would simply click this. This is all the information they would normally need to fill out. In your case, that's not the case. There's a more simplistic way to do it. When we get to the presentation, we have a quote date to protect ourselves. This is where you can either preview it, or you say, I want to generate a share link. So if you do that, and we'll create a new one up here. This is what the borrower is going to see. So when they open it, there is a disclosure. And again, our team is going to work with your team to make it as specific and detailed as you want, as long as you want. This is very general, of course, but they have to click this. This is your, this is just a comparison. This is not an official loan estimate. So they have to click through that in order to get here. Going back here, preview. Now you have the option too. The one thing I didn't do is to generate a video. So most people have a video, and you'll see like in the bottom right-hand corner, it's embedded in here. And it's just a way to say, hey, Mr. Borrower, Mrs. Borrower, we talked last night, and based on your goals, here are the 3 options that I set for you. And I believe you should go with the 20-year because of these 3 or 4 reasons, and really break it down. Why, they give that advice. It's that they're looking for some hand-holding here. So if you can provide as much advice as possible, it's going to separate them from the other LOs that are simply giving a fee sheet, an Excel spreadsheet. and confusing them. So the video is much more effective. How showing a TCA is very effective, and it's going to win them business, but having a video is actually shown to even be more effective. Again, humanizing it. So I talked about a little while ago about going through here and actually having to, fill out information. Here's the client. Fill out the name. Anything with a red asterisk, you have to fill out. And as you'll see, not a lot is needed to create a TCA. Contact information, don't absolutely need it. Goals, is it a purchase or a refi? You do need that. Current property value, affordability, again, don't need any of this. Nice to have, but certainly don't need it until you put in your products. So here's the 30-year. For every product, you're going to have the same thing. All right. It's going to be, here's the product. You're going to need to fill out everything here. You can click a button. We have an integration with OB. You can click this and get pricing, fill out this information and get pricing. There's closing costs. And again, you can break that down, closing cost detail. Our teams will work with your teams to make templates. So, you can have a 30-year, you can have a 20, a 15, you name it. We will work with you to simplify it so they don't have to recreate the wheel every single time. If you do have an integration with Closing Corp, and I can't remember if you do, we are able to get fees there, third-party fees, fill out that information. The fees will load into here, apply to loan, and they're done. And then monthly costs. And even with OB, the monthly costs will not be carried over. They don't have them. So you might have to tweak that a little bit. But other than that, you're done. So we do the fee sheets, we do the product templates. We can create all those for you. The great thing, as I mentioned, is you do have OB. So as an example, let's get rid of that. So let's go into our pipeline, pretend like your loan originator is working in OB. So they're working in here anyway. The only difference is when they're going to submit this, and it's going to bring them to a second page. And the second page, you'll see, has a mortgage coach button up here. So all they need to do is select, 3 different loans. And again, it doesn't quite matter in this case, but we can select 3 different, and we'll do a 15. So you can select 3, or you can actually even go into the details to get discounts and rebates. So we already selected 3. So as you'll see up here, it says 3 out of 4 selected. All you need to do is click that mortgage coach button. And this is kind of just summarizes what you selected. This is confusing. So you have the ability to just say, okay, my borrower's not going to understand what this stuff means. Let's get rid of this and just make it a 15, a 30. And I selected 2 15s, but get rid of that. Launch to mortgage coach. And there you go. And now it's asking me to create a video. In this case, because this is a test, we already have a video here.
Just hit record, start talking, hey, Mr. Borrower, here's some options for you, call.
So very easy. Like I said, it embeds. You can tweak that video. You can generalize it, make a general video for everyone. But we suggest making it very detailed per person. It's much more effective that way. And the other thing, so that's pretty much it in a nutshell. What I'll do is I'll end it with this very quick video. This is our CEO, Dave Savage, kind of telling you what a total cost analysis is and giving you more information. And then hopefully we can set up a more formal demo, and I get a chance to get to know your business a little bit more. So I'm looking forward to that.
Welcome to a Mortgage Coach Total Cost Analysis.
My name is Dave Savage. I'm the CEO, co-founder of Mortgage Coach. If you are a loan officer, this Mortgage Coach total cost analysis can reshape your business. It will improve your conversion, help you communicate with families in a way that's a competitive advantage. You'll notice that this is a digital mortgage experience. It's got a place for your photo. It's got a place for your logo. This is the way you should be delivering rates and fees to customers. And if you came to this and you are a family, you are a borrower, you're looking to refinance or purchase, this is how you should be making a mortgage decision. You notice that there are options, cost over time, strategies to pay off the loan faster. So borrowers love this. It's a service to a consumer. And you know what? Realtors love this total cost analysis because they want to help their customers build wealth with real estate. And the only way to do that is with a total cost analysis. It shows mortgage options. It shows the cost of those options over time. And it shows how much someone is building wealth with real estate. So realtors love it. Families love it. Borrowers love it. Leaders of mortgage companies, they want to have their loan officers communicating effectively in a modern way with a Mortgage Coach total cost analysis.